It's very simple. We are popping the largest financial bubble ever created in the history of humanity. It's not an understatement, it's truth.
Hi, everyone. Alex Kaminer here with Tim Nihil, our founder, and Alex Krieger, our analyst. We are here to talk about what's happening in the traditional and digital marketplaces. We help translate what is happening in the financial markets so people like you can use it in your day-to-day lives and make sharper financial decisions. For today's topics, we're going to be talking about end of the year market updates and comparing all the different types of markets and what we're going to see and themes for 2023. We're also going to touch again on the FTX scandal. So wait to the end of the video to hear about that. For now, let's go with our traditional markets. Tim, anything to say?
Yeah, a couple of things. I think the past couple of weeks, stocks, bonds, commodities, etc. We've seen the markets go positive and go up. I think it's very interesting. Like a lot of the time, we're talking about the markets because markets and investments are run by computers now and machines and not people. We don't think that the markets and the computers are seeing what's actually going on. So with this latest round of green in the S&P 500, NASDAQ, et cetera, I think it's explained by the fact that the assumption is the Federal Reserve is hawkish on their quantitative tightening program and their rate hikes. And the market's been pricing in a slowdown of rate hikes, like starting in second quarter next year, when that probably is not going to be the case. So it's kind of fool's gold, fake gold, right? Like right now it's up, but probably going into next year, you can expect the correction. And I think the markets will begin to price in rate hikes that are going to carry through 2023. So that's definitely going to affect everything across the board, especially in the equity and bond market. Holiday season, it'll be interesting to see the sales. Online retail seems to be and have taken over traditional retail. I went out shopping last night, for my kids and family members, and I couldn't believe it was Christmas season or the holiday season. Like the stores are empty. There aren't a lot of people out shopping. So I think that partly is a sign of the times and partly showing this transition into more of a technological space and world where shopping is now dominated by online retailers like Amazon and even direct Walmart, Target, etc., versus going to the store anymore. So long term will probably play out, especially in the commercial real estate, but that's something that we're watching as well.
Do you
Tim,
have, one sec, do you guys where you live have the, at those stores, Walmart, Target, and your grocery stores where you can pull up and they bring your groceries out to you? Do they have that there?
Yeah, depending on a
Okay.
grocery store, but yeah.
Yeah. I was just curious. Yeah, it's crazy. Laziness. Convenience in a sense.
It's kind of funny. My Starbucks has 6 of those spots for curbside delivery. And when I go to pick up my coffee, when I order it on my phone, I just park in that spot because nobody is ever in them. Like
No one uses
with the
them.
grocery store. No one,
Yeah.
no one.
I never see anyone use them.
Right, but think of groceries now. You have Whole Foods as part of Amazon. You have Instacart. Like people are not going to stores anymore. It's very interesting. So I think we have to pay attention to the trend lines for retail on how much online buying is being done versus traditional.
Well, I think it's even more than that because I saw something in the news a couple weeks ago around right after the Black Friday holiday weekend, and it was the least crazy Black Friday, I think, in history. And I think it has more to do with this fear of an upcoming financial crisis more than just like going out and shopping, or the laziness of not going out and shopping.
And Cyber Monday, yep, that's
Yeah.
what I was hearing too. That whole weekend from Friday to Monday was the worst ever. And there was people were looking for deals, shopping for the deals now before Christmas to try to find due to inflation and what they can get for their bang for their bucks.
Right. And even companies were doing smaller sales than usual because they were nervous about the upcoming financial crisis as well. So it was on both sides of the consumer market.
So what your guys are saying is the consumer in a consumer-based economy is not consuming.
No,
Correct.
they are not.
Very interesting.
And then I want to touch earlier on the first thing you were talking about, Tim. Did the Fed raise rates yesterday, 84 bips?
I didn't see the number. I know that they raised. I didn't double check.
0.75%.
Yeah, I think 75, either 50 or 75.
Okay.
But I think it's like, it's weird. It's almost like having a crystal ball. You already know the playbook that's going to happen. So it's just a matter of what the specific at that point in time is. But I think definitely that the tea leaves have lined up. And I think it's interesting what you talked about with Cyber Monday, what you guys were talking about, Cyber Monday, Black Friday. And this is kind of wrapping up into year end. This feels like it's the calm before a storm. So anyone who lives in an area where there are tornadoes or heavy storms, hurricanes, everybody knows what I'm talking about. Or even in New England, right? When we get these big nor'easters, there's always this eerie calm beforehand. And I feel like that's 2023. So we think there are absolutely going to be some massive opportunities coming out of it. We've been looking at energy, commodities, gold, silver, especially oil, natural gas,
Precious metals, uranium.
precious metals, uranium, copper. Those are going to take off. At some point, semiconductors, Apple just inked a big deal with Washington to bring chips back to America. So there's an opportunity there. But I think overall, if you're invested in the broader market, S&P 500, you're going to have a big awakening next year because I think passive investing is really going to take it on the chin. So that's our prep for next year. And we're still trying to, teach people, hey, there's a different way to invest and it's not all in the stock market. So really learn how to be an investor versus an indexer and an asset allocator, because indexing and asset allocation that model is dead. It doesn't work.
I got a question. What is this ESG thing? I read the other day, DeSantis pulled a bunch of pension funds and the state funds out of BlackRock.
Right. So ESG investing is basically environment and social governance. So it's like the Going Green initiative, if you will. If you look at it from an investment perspective, like there are this not to say they don't exist, because there are some really good companies out there. Calvert's one of them we've used, that they really hold true to, hey, this is what we're trying to accomplish, and the companies we're investing in meet the requirements for qualifying for being environmentally responsible, socially responsible, whatever, right? So it's kind of like the next stage that people are trying to get to. What they found specifically with BlackRock is they've been using that program to basically guide money into strategies that don't meet those environmental and social governance requirements, right? So it's almost like, hey, we're going green and we want money to go to solar panels, but it's ending up in ExxonMobil. That's pretty much the crux of it, right?
Interesting.
So it is very interesting. So it's one of those things where there are some things that need to shake out there. In that space, it has been eye-opening, but if you do your homework, you already know what they're doing, and you're not going to put money meant for that into those types of strategies, right? You're going to go to the folks that actually have been doing this for a long time, because this is not new, right? stuff's
Definitely,
been,
yeah.
these types of investments, it's been going on for 10, 15, 20 years. So there's, and it's not just BlackRock. I think Invesco was named, maybe Fidelity and Vanguard are named too. Like, it's not just one financial firm, but it's a number of them that have been found to be directing money not to the companies that they're intended to go to.
Not to their fiduciary responsibilities.
Right, but you have to remember, these investment firms are not fiduciaries. They'll drop the F word, they'll drop the F word fiduciary to you all day long, but by law, especially like in the 401k world, they're not held to a fiduciary standard. Right? Like in 2008, the Pension Protection Act said, okay, you could auto enroll, auto escalate people and auto default them into an approved qualified default investment alternative. It's a QDIA. It's basically it's a target date fund.
Interesting.
But those target date funds and the financial institutions that run them are not held to a fiduciary responsibility with how they manage them. So they might say they're a fiduciary in marketing, but behind the scenes, especially with most retail, they're not. Institutional, yes, for sure. But you have to do your homework on that one and read the fine print.
Yeah, interesting.
So let's back it up a little bit. Let's go back to the traditional markets. And I just want to talk about how among bond traders right now, there is a lot of anxiety building around. I mean, most 10-year treasuries declined in the last few weeks, declined to about 3% or less. Most of them declined 2 or 3 basis points. The US treasuries declined 9 basis points. And while a lot of other things are decreasing, like the stock market, the crypto market, some commodities, most currencies, it's nowhere near as much as bonds are. So let's talk about that for a little bit.
Yeah, the 40-year bond bull market is over.
Right.
And everyone that has a financial plan is in trouble.
I mean, we've been
Because your
saying
financial
this
plan is
forever.
Your financial plan is wrong by a lot, right? And we've been saying that forever. I think I saw like the world aggregate bond index was down over 20%. So if you're going to your safe haven that's supposed to earn you 4 to 5 with no downside, and now you're down 20.
Right.
Interesting.
It's very interesting. And, you know, on our traditional finance side, I don't think we've purchased a bond in 3 years. And even our trade desk, when I call down to get quotes, half the time they're like, every time you're just better off going elsewhere.
Right. I mean, it's just everything is falling. I mean, we right now, like you said, there's the calm before the storm, and there isn't too much change. Like looking at the stock market, the NASDAQ is only down 0.1%, Dow Jones 0.2%, S&P even less than 0.1%. Bitcoin's down 1%, if Ether is down 1.5%. It's in the last couple of weeks, it's not the biggest change. The only one that's actually increasing is gold. Gold futures are rising about 1%, which we've been saying, buy your gold, buy your silver, precious metals. They're very important.
Buy physical,
Mhm.
because your paper, gold and silver and commodities are not going to trace like they should. And people are going to learn about tracking error.
Right.
And tracking error is a very important measurement in the investment world, especially indexing. So, like, you know, you're right. That's a great observation.
I mean, most of this just points to, like we've been saying, recession, if not worse. So, and this, it's you could look it up very easily.
Right. It's very simple. We are popping the largest financial bubble ever created in the history of humanity. It's not an understatement, it's truth. In fact, on the news wires last night, apparently there's anywhere from 60 to 85 trillion dollars worth of FX contracts, futures contracts that they lost. We're talking banks and pensions in the shadow banking industry. So you think FTX is a problem at 8 billion? Wait till that one flushes through.
Yeah.
Well, I heard the
that's-
treasury and the IRS just misplaced another I was reading an article the other day, misplaced 2.3 trillion of taxpayer dollars.
I didn't see that
Hear
one
that?
yet. So apparently we're all losing cash now.
Right? It's just disappearing, sucked out of the system. No one knows where it goes.
Knows where it goes. No, so if it's right for anyone that's out there right now, man, you have to be really, really doing your homework and paying attention to this stuff. This one's different. For some reason, this one's just different.
Right. Speaking of FTX, why don't we go into the crypto markets a little bit?
Yeah, well, let's touch on, there's no liquidity right now. You've seen over the past, I would say, this quarter, that, yeah, we pumped up to 2,000, had our drop back down to 1,000 area for Ether, and now and BTC went to 15 and then went to 25. There's no liquidity there's one of my bots the other day it's called whale calls or whatever. It shows daily volume on BTC. Gemini, Kraken, Coinbase are all doing under 1,000 BTC trades. That's a 24-hour volume. Between all of them, it would be less than 2,500 BTC have been traded or bought.
Wow.
So there's no liquidity, no one's selling at these prices. And you'd be a fool too. Why? Why would you? DACA yourself in, dollar cost average down, buy more. If you're buying gold and silver, buy Bitcoin and Ethereum. That's what I say. Closing out the year, I expect it to be probably till end of first quarter. We're going to be probably sitting in this limbo phase till we figure out what's going on more with the FTX scandal, the Genesis scandal. There's a couple other companies that we're starting to see. BlockFi that filed for bankruptcy last week or 2 weeks ago. We're in a weird time with crypto. We're trying to figure out, do we need to be centralized or do we need to be decentralized? We're trying to figure out what's the best way to do it and how to go about it.
So speaking on the FTX scandal a little bit, why isn't Sam Bankman-Fried in jail?
My personal opinion is he paid too many donors. And the more
Well-
crazy thing is, where's the money going? Where is all the money? All $16 billion, where is his money going to? Where has it gone to? And he's doing interviews with, what was something in New York City. He did a video.
The big conference. He was
Yeah,
a part of.
exactly. I forget what conference it was, but this was last week. He's doing videos with them and going around and doing other interviews with people. How come this man, Bernie Madoff, did it 10 years ago or 12, and he was in jail right after? Enron, I guess, apparently too. He has the Enron lawyers that help facilitate the takedown of Enron are the people that, what was his name that did that? The lawyer is doing his, and he said it's the worst fraud he's ever seen in his life. And if that guy's saying it, I don't know. It doesn't make any sense. If it's worse than Enron, one of the biggest fraud schemes, I don't understand how we have no repercussion for this man.
I don't think there is an answer that we could give that.
Right. Like you said, Krieger, he paid the right people.
Right.
It does not represent the views.
Yeah, it doesn't represent crypto right. I don't understand how. I don't know. Just feels like it was a setup all to begin with to attack crypto and draw people away from it, steal their wealth, transfer of wealth. We've always been talking about for the past couple of years about it, or months, say transfer of wealth. and it just seems like he robbed a bunch of people, and it's very sad. And I hope that he gets repercussions, because he makes this whole other part of the crypto industry look bad by doing this.
Right.
Yeah, I think it'll play out. The word that's coming across loud and clear now, and this was something that was talked about a lot on Bloomberg last week. In terms of crypto, the big boys are in the room. Right? So if you look at BlackRock, going back to them, Larry Fink said we're going to move to a world where everything's tokenized. And, they're now pushing their digital asset platform and their solutions. And they're doing it to their institutional clients. So I can't remember the book I read this in. Maybe it's From Good to Great by James Collins, if I have it right. It said every idea turns into a revolution, then becomes a business, and then ends up in chaos. It just becomes a racket, right? Like we're seeing that across the board with everything, and we're in a new transition. So this idea of crypto, which is an idea that became a revolution, is now about to become the business, right? So when I'm looking at the crypto side of things and what we're seeing, and it talks about it across the board, or this is just a weeding out of garbage, right? The people that are going to be in this are going to be in this, and now you're going to get a lot of big money behind it. And whether it's decentralized or centralized, you're going to have both, because you need both, right? Like, think about it for our clients on the traditional side that do want to buy Bitcoin or Ethereum. A 65-year-old person, 70-year-old person is not going to log into Coinbase, Kraken, whatever, right? They need help doing that. And they're never going to store on a hard wallet, right? You have a whole generation that's been used to a dollar system and a banking system that you're asking them to completely change behaviors. They're never, without the centralized part of it, you're going to have an entire massive segment of the population that will never get it enough good on their own. So, and at the same time, there's no such thing as 100% centralization. So you're going to get both, and you're going to have people that want to do both. And it's probably a benefit for everyone involved.
Will they allow it though? Both BlackRock, Vanguard, and there all these other big institutions that are coming in, joining crypto that were against it forever, come in and, I don't know, seems orchestrated. They buy these companies pennies on the dollar, buy what they can, and then make it their own way and control. They take the existing system and then they control it to their favor.
Yeah, but we're not here to do theories around that, right? But in general, the answer doesn't matter, right? Because take an ETF, for example, an exchange traded fund. Who are the two biggest providers? It's BlackRock through the iShare acquisition, and then Vanguard through their indexing that John Bogle founded and invented. ETFs were invented in Toronto in either 91 or 93, right? So, and Vanguard and BlackRock, they don't control the whole market of ETFs. They're the predominant players and the largest players, but they're not the only ones. So it'll be no different, but they're already talking about in these banks and these financial firms, I can send massive amounts of money for transactions at the speed of light with very little cost to it. Like, you're going to give everybody the opportunity to participate in the world economy. So there has to be some centralization just because of people's capabilities or lack thereof. But there's also going to be a massive population that's going to be DeFi, and I hold my own hard wallets and personal responsibility, because that's just the next wave from boomers through the Gen Xers to the millennials to the Gen Zers. Bless you.
Thank you.
Well, on that note, I think that's everything that we wanted to talk about today. So on behalf of Twin Shores Financial, thank you guys all for tuning in. If you enjoyed and want to keep up to date on the markets, please tune in every other Thursday for your financial information. We are going to have one more market update going into the new year, so please subscribe if you would like to see that. Please don't forget to like and share as well. And if you have any questions, please comment them down below. Any last words?
Not your keys, not your wallet, guys. Get yourself a nano ledger right here, boys.
Right.
Go get one.
There you go.
Tim,
I'm
any
just
last
gonna say
words?
happy holidays to everybody out there. Have a great holiday season.